go into negative interest rates was unexpected and surprising. Listen in.
Well, it's not really, as much a liquidity tool as a rate signal, Udayan, and I think this was clearly not expected. I don't think anybody sort of expected Japan to go into negative interest rates. There was some expectation that they will raise the QE levels, but it was not expected they'll go into negative interest rates. So I think it was a surprise to the markets. And I think market is therefore understandably confused about what it means. We saw even Japanese stock market sort of doing a very sort of volatile move on the day it was announced, though they have since stabilized. But I think the essential issue is that from Japan's perspective, obviously it is an attempt to sort of weaken the currency, get the growth back on track, which has so far stubbornly refused to go up despite huge amount of asset purchases. So I think it is the next step in the sort of unconventional tools that the governor has been following. What it means to the rest of the world, I think it definitely does mean that there will be some liquidity infusion to the rest of the world, given the fact that the interest rates in Japan have turned negative. So outflows hopefully of capital will increase. From the market's perspective, the question essentially is twofold. One, we've been dealing with slow growth that has been visible, but I think of late we've been dealing with macroeconomic uncertainty with regard to the liquidity itself. And while the central banks in Japan and Europe have been easing or have been on the easy side, there has been some drying up liquidity, effective liquidity for emerging market assets. To the extent this move sort of assuages those concerns, that will be positive for risk assets. So I think from market perspective, it is more important to sort of get some sort of comfort about the flows rather than the growth, which is still looking very shaky. You saw the Chinese data this morning, weaker than expected. So that the fundamental data points on growth have not turned around at all. They've only worsened in last 3-4 months globally.
The more you speak to global analysts, they seem to be suggesting that the headline numbers are probably overstated. Most people say that China cannot be growing at 7%. Some even question the Indian data, looking at the top line numbers of the large companies, saying this is not consistent with 7.5% growth. Do you fear that actual global growth this year might be marked down more than even what the conservative estimates have been at the start of the year?
So then our economy team globally does believe that the growth will be lower, especially in China, where we are talking of 5.8% growth, which is much lower than consensus. Actually, we are the lowest on the street. So we do think there are headwinds to Chinese growth. So obviously stemming from there, our view might be slightly different from where the world view might be. But we are definitely concerned on growth. So far as India is concerned, what you have is what you have, right? So we essentially, based on the data we have and the methodology we now follow, we do believe that there will be some improvement in growth. Now, also remember that we are living in a highly deflationary environment, especially with regard to commodity prices, and the top line growth and the real growth are diverging markedly in India. I think for the first time, the kind of divergence we're seeing, I think, is unprecedented, because the kind of decline in commodity prices we have seen in 1 year was something, the kind of increase, $30 to $100 crude price increase happened over a 5-year period. But we got all that decline in just 1 year. So there has been a massive deflationary pressure. It doesn't take away from the fact that volume growth in India has been slightly better this year across sectors. So just looking at top line of the companies would not really give you a picture of real growth. I think real growth and inflation, obviously the pricing power are most diverse this year than any time in history. But as I said, I mean, we do believe there will be some growth tick up in India on the methodology that we currently adopt, compared to last year.
All right, well, you can catch that entire conversation at 6:30 p.m. today only on CNBC TV 18.